Hi everybody, this is Jamie's trade log from this past week. He was not, as you can read here, he was not very active, so he could not capitalize on these big yen moves. But he traded other pairs, and he still had a great week, right? So probably a Swiss strength, a yen weakness, etc. Right? Let's have a quick look at his trades. Let's get over this one. Let's have a look at this one. So this is an S2, right? S2 in this time frame, and well, you have to believe, right? But whenever the 200 is close, and this is very close to entry, you have to believe, right, that the 200 is going to be broken. It is a stop run level, but it as well creates some volatility to it. So you can expect both a big move or an unlucky stop out, basically because of an increased volatility. And that's what we see here, right? Price good, well, price tested here, the wick tested the 200, and then there was a volatility against trend direction and a quick stop out. So you can trade these things, but you need to know what you get into. And Jamie applies a lot of discretion and intuition in his trading. So he basically relies on his intuition if he wants to trade this or not. This is an S2 on a very short time frame, the 1 minute chart. This is where the stop goes. It's in a trend, right? We have the zigzags. However, all time frames are overall sideways, right? You can trade charts with time frames in overall sideways. You just need to know your win rate is much smaller. However, when you are successful, you might get a big R. So again, trading within oval sideways requires a lot more experience and a lot more intuition. And Jamie likes to do that at times, right? When he thinks the time is ripe to trade out of oval sideways. And if the market is in a strong market responsiveness, trading oval sideways works beautifully, right? Because the success rate is much higher, and you have the stop run levels that produce big R's. Now this worked nicely, right? And we are breaking this level, and we're just moving to the next level, right? On this on that one higher time frame that has swing potential, that could have been swing traded as well. But Jamie is fine with taking the profit and run. S2 short US Swiss. Now this is one that a couple of you traded, right? So the idea here is to trade a snapback to the moving averages. We've got a nice momentum move. We've got an S2 pattern. We are sitting here again, right? TC2. We are sitting at the 200. So the question is, does it allow the bears to go right off the hook, or will there be another pullback higher? So I can see here that Jamie is applying a conservative stop, right? He could have put it right here as well. And well, the reason for that might be that he just wants to give more room, right, for the stop. So the stop now is actually above the 200 and not right on it. And this is well here it worked out nicely, right? So the 200s didn't have an impact on price action. Cat Swiss, or again Swiss strength, right? So that's an S2 short. So as well here we're trading within oval sideways, right? Oval sideways, oval sideways, oval sideways. You have to be really careful. At times, well, you get a great R result. So what is good here? That's TC2. Well, this move, right? That's a momentum move for the no, sorry, the momentum move, the momentum move is shorter. This is the momentum move for the pattern. But there was an overall move, which is this one, right? And this move already broke these lows, right? So whenever something like this happens, this level, this resistance, price resistance level, well, it gets loosened up. And the more loose it becomes, the more often it got tested and broken, like here, well, the easier you will actually pass through it. So here we have got the opportunity. This has loosened it up, and with the next move and with the power of the pattern, well, we'll be able to at least go to the low, right? Reach here this low, and then eventually break the low. So what happened? Well, it broke the low, right? Whenever an important low gets broken, well, you get a big move. And this is what we saw here. That's the stop run move, and you basically want to grab the profits and run, because after stop run move, well, you can expect a big pullback. So that has not swing. I wouldn't swing trade that, for example. Versus 6R. Let's have a look at this one. Another 1 minute. So markets were moving, right? Big momentum move, consolidation. That's a plain vanilla S2. We are not in oval sideways. Well, that's a follow up, right? We have definitely broken that. We have made a new low with a momentum move. That's an S2 coming out of oval sideways, but we are no longer. So now we are in free fall territory here, right? So this can drop a long way. Now this has swing potential. And Jamie was fine to run with a nice profit. Again, an S2, right? The standard type of S2. Well, this is taken with discretion because we have actually made a new high, right? So TC1 and TC2 are like per definition not in an uptrend, so downtrend. So he's breaking the rules here. Or whenever you break the rules, you need to know that you do, and that you do it for a good reason. Now let's have a look. What was the good reason here? Well, we are overall in a downtrend, right? We've got lower highs. It has made a big move down to meet this low. Now we've got a big bounce up, basically testing this high. So then it falls off, right? So this high got tested. We get a momentum move, a strong momentum move. So that can tell you, well, that was an exhaustion move up, it got tested, and now we're back into a downtrend, right? So that's the idea here, and that worked nicely, right? Let's quickly go back to this one we had seen before. So this was traded as an S2, right? Well, this could have been traded as well as an S1, with the flat line being where the red line is here, right? So that's the entry level, and the stop could go up here. So that's basically could have been traded as an S1. That would have actually delivered a bigger R result, or as Jamie did, as an S2. Thank you.